battle over crypto oversight is heating up. Earlier this month, a bipartisan group of senators put forward a bill that would grant the Commodity Futures Trading Commission, quote, exclusive jurisdiction over the digital commodities spot market. Joining us now to discuss is CFTC Commissioner Kristin Johnson. Hi there, Commissioner.
Good morning. Thank you so much for having me this morning. It's a pleasure to be here with you.
It's our pleasure. Thank you so much for joining us. So we've actually got dueling bills that are really giving the CFTC a greater play in the crypto market. Of course, the one from Senators Cynthia Lummis and Kirsten Gillibrand out earlier this year. Look, it's also an election year. Are lawmakers moving fast enough, given how much disruption we've seen in crypto and how much talk there is for the need for a clearer regulatory framework?
Well, this is truly the sort of exact question we need to be thoughtful about. Before I launch, however, I want to offer a standard and anticipated disclaimer. The views I'll share this morning are my own, and they are not the views of the chair, my fellow commissioners, or the staff. But turning to this question of the regulatory gap, if I might, for a moment, just begin to unpack that, because I think this has been a subject matter that has caused consternation, I might suggest, and confusion in the market for quite a bit. And so unpacking this, I would suggest that the Commodities Exchange Act, when adopted by Congress, gave the CFTC very broad authority to look into commodities markets and to ensure that we police against fraud and market manipulation. What does that mean specifically? Well, since 2014, the CFTC has brought 50 enforcement actions, largely garden variety fraud actions enforcing against Section 4B, 40, 6C1, 180.1. That's all simply to suggest that where market participants are engaged in activities that essentially result in or are the equivalent of lying, cheating, or stealing from customers, we are actively and vigilantly policing those markets right now. That authority is expressly and clearly within the CFTC's mandate. I think the question before us is about the regulatory gap. It's a question about oversight of the spot market, and more specifically, the authority to ensure that market participants register and come into our ecosystem and obtain for the customers they serve the protections that being part of the ecosystem, the regulatory ecosystem, means. So here, I'm deeply thoughtful as we consider the enforcement actions that people not misunderstand that these are the types of activities that would be disallowed if you play in any sandbox, right? So this is misrepresenting to customers that you actually have a product when there is not a product there, absconding with their funds, using their funds to buy, to rent a yacht or private jet. And in some contexts, more novel examples, Ponzi schemes or pyramid schemes, examples in which there are pump and dump schemes, and more recently, taking customers' cash and BTC and arguing or suggesting that you're investing those funds in managed funds, but not actually doing it. So that piece of the puzzle is well settled as part of that which falls within the ambit of the CFTC's jurisdiction. Your question asks about forthcoming and pending legislation and at least two significant acts in Congress that we believe might mark the direction of travel in the next few months during the next session of Congress. These bills offer, in one instance, a comprehensive template for how we could adopt a whole of government regulatory approach for addressing many different aspects of this exciting, innovative, novel ecosystem of financial products. The other bill is more circumscript and looks directly at the CFTC's oversight, thinking carefully about the registration process for broker-dealers, for custodians, rules that would be part of any rule book for a registrant that is part of the CFTC's markets. But most importantly, all of the proposed legislation, including the executive order President Biden issued in March of 2022, Treasury initiatives, all are aimed at protecting those investors that I highlighted in the opening of my remarks here. Those who are vulnerable, those who have historically possibly been marginalized and are eager and excited about opportunities to invest and participate in this marketplace.
Commissioner Johnson, it doesn't sound like you're actually implying a radical shift here. Like, it seems as if what you're looking for is some clarity around where the jurisdictional responsibilities lie, but ultimately the function of the CFTC is going to be somewhat similar to what you're doing the same old stuff you've done and managed to do for some time. However, clearly, there is a sense that there's a greater need for attention to these markets. In the context of that, with the CFTC presumably having this higher role, do you have the resources that are needed to do this?
So I want to start by saying I think you make several great observations. One of them is that this is the CFTC and in some instances sister federal regulatory agencies exercising the authority that they've been granted, expanded hopefully through clarity, through congressional action, whether it's the Stabenow-Boozman bill or whether it's the Loomis-Gillibrand bill, or whether it's one of the forthcoming bills that I understand may be pending and likely to be released in the next session of Congress. The idea here is to get clarity around regulatory oversight for many reasons. It really benefits market participants to know who their regulator is. I'm thoughtful about the firms that have already launched careful initiatives to develop onboarding protocols, internal protocols to ensure KYC or onboarding of customers comply with banking regulation. There are many that are in our markets. As quickly as I'm able to describe enforcement actions, I want to suggest that there are many operating in these markets who are eagerly seeking clarity, as you described. And I think it's important that they receive that and that we are clear on what our mandate is. In addition to that, you're right. There have to be resources allocated to sufficiently exercise oversight in these markets. But we've seen all of this before. Number one, we've seen the collaboration, if you will, between the CFTC and the SEC in oversight of parallel markets that sort of neatly complement one another. Here, I'm thinking about regulation of swaps and security-based swaps as part of the regulatory framework established under the Dodd-Frank Act. We've seen Congress act to ensure that it is clear for regulatory agencies what the scope of their jurisdiction is, and we invite that clarity. I think it's important for us as regulators and for market participants. I also think the collaboration extends across the federal regulatory architecture and also to include state regulatory oversight. Money transmission services businesses laws are a critical part of oversight in this particular financial market ecosystem. It's important that we are working hand in hand with state regulators as well. And I'd go further and suggest for international regulation as well that the U.S. should be a leader in developing the regulatory policies that we will adopt that would apply to markets globally. We can see in Europe immediately that the UK Parliament is engaged in thoughtful efforts to ensure that they are actively progressing in developing a regulatory framework in the UK. In Europe, the European Parliament and Council are engaged in the development of MiCA. We clearly see global efforts that I hope will be the result ultimately of collaboration and cooperation to bring clarity, as you described, to this financial market ecosystem.
Commissioner Johnson, there's been a criticism that the crypto markets or that crypto lobbyists who have spent at least over $10 million in the past half year so far are pushing to have the CFTC regulate crypto because it's the underfunded, if you will, or it's less funded than the SEC. It's at least one criticism that's been piled on. So I do want to address that. But does that also bring to light perhaps maybe the system that we currently have, where one commission regulates the futures markets and another one the securities markets, that ultimately from the perspective of the retail investor, the average American that is looking at this, that they're not protected because you have different agencies covering different things, but ultimately there are things in between that can fall through the cracks, that perhaps there should be a consolidation of the agencies, given that they were created decades ago during the Great Depression, and it's a different world now. Should these agencies be consolidated as part, it sounds like it's heretical right now, but does the digital asset world bring to light that maybe things need to change in terms of how we regulate?
This is a really thoughtful question, a set of really thoughtful questions, actually. And I want to begin where you have left off. If I could begin at the end, if I might, with respect to regulatory oversight. So I actually want to not just begin with the final question you offer, but also where that question originates. In 1933, Congress adopted the Securities Act of 1933, which was the first federal regulatory act intervening in securities markets. And the Exchange Act followed in 1934. I highlight these two pieces of legislation because they followed the stock market crash of 1929. And just as you described, they were Congress's efforts to intervene to ensure hardworking Americans are not parted with their hard-earned money as a result of fraudulent schemes. It also sort of the introduction of these two pieces of legislation also began to help create the foundation of the regulatory architecture in our unique and well celebrated and arguably preeminent financial markets. And so what I would suggest is that Congress has laid a foundation through legislation in the creation of the Securities Act, the Securities Exchange Act, the securities related acts that followed, and ultimately the Commodity Exchange Act, a regulatory framework that ensures complementary regulatory oversight. In other words, our jurisdiction meets the jurisdiction of our sister regulatory agencies at the seam, and we are tightly woven together. And in part, that weaving together of a regulatory framework is intended to ensure that there is no regulatory arbitrage. There are few opportunities, if none, ideally, for market participants or others who might have that might not be motivated by a desire to invest and build and create entrepreneurial businesses to grow, to scale, and to do the kinds of things that we want entrepreneurs to do in our market. Those who are not motivated by those values, those who are seeking to exploit vulnerable market participants, our goal is to ensure there is no gap. And this is where we begin, actually. There is no regulatory gap that would permit that type of conduct and behavior. It inures to the benefit of market participants as well as consumers. We talk a lot about customer protection, which is critical. It is one of the core values of our regulatory framework. But I would also highlight for you that all market participants benefit when everyone plays by the rules. Part of the reason is it creates fairness and access for many market participants. It also establishes as I highlighted earlier, with preeminent financial markets here in the United States, part of what we've done is establish reputational integrity. This reputational integrity attracts market participants from all over the world to invest in companies that are that originate and raise capital here in the United States, or that choose, though they might be elsewhere located, to affiliate with exchanges and clearinghouses that are organized and subject to the regulation of the United States. There is a reputational benefit to the gatekeeping functions that these rules and regulations create. And I would just posit that those market participants who are eager to participate in our markets and enjoy all of the benefits of reduced costs of raising capital, of the efficiencies, of the reduced frictions that come from operating in well-regulated markets, are likely celebrating the possibility of clarity. So thank you for bringing that forward and also sort of giving an opportunity to highlight the benefits of regulation. I would finally just say that the regulation that we have adopted is intended to ensure market integrity. The customer segregation rules would be critical, as we see in the crypto winter that you all were describing in the earlier segment, to protect customer assets, to ensure the integrity of individual firms. Capital requirements are also another mechanism that we've employed to ensure the integrity of firms in difficult times, where there is reduced liquidity, where there is high volatility, where market conditions may make it difficult for firms to continue to operate as they may have in a golden era. So part of what we're doing with regulation is ensuring that those market participants that want to be in our markets for the long haul, that are committed to servicing customers and building a tremendous reputation, are able to do so on a level playing field and with the support of the regulators who, in all honesty, surveil and monitor for the purposes often of facilitating the success of their businesses. Cyber attacks, for example, are one of the kinds of things that we are deeply thoughtful about at the CFTC, and our system safeguard regulations help to ensure that the market participants registered with our agency are adopting the best quality, highest caliber standards in oversight of these types of concerns. So, I'm deeply thoughtful that regulation can be challenging, that it can be expensive, that there is a need to take on the development and integration of systems that will enable one to comply with regulation. But one should not overlook the benefits of adopting an effective, well-tailored regulatory approach.
Commissioner, if I could just, I know we're running out of time, so I was just going to ask you a question here. I think the U.S. is arguably one of the most confusing crypto markets in the world, largely because of all these different agencies. And I think, the average investor just doesn't understand like who does what. So when we look at these bills that are being proposed, I was just wondering if you could just break down for us some of the specific changes that are being proposed. Like if I understand correctly, one of them is that the CFTC would oversee crypto exchanges in the United States. For example, Coinbase would have to register with the CFTC. Is that accurate? Is that correct? I'm just trying to understand a little bit what some of the like actual concrete proposals that are on the table here that would look different from the situation that we have now.
This is a great question, and I think they're ringing the bell behind me, so I apologize if I have a tiny bit of background noise. It's always quite exciting to be here at the stock exchange, the New York Stock Exchange, because of the enthusiasm. Yeah. The enthusiasm that surrounds the ringing of the bell, opening bell every day. Well, there's the bell.
Saved by the bell.
There you go. There you go. Well, I would just say very quickly, with respect to, let's drill down and think about one bill in particular, the Stabenow-Boozman bill that is intentionally titled with language that highlights its goal to protect consumers. The Digital Commodity Consumer Protection Act outlines for the agency, and this will ultimately be a necessary element of effective legislation adopted by Congress, to outline specifically for the agency the types of changes that will arise in the agency's statute that establishes jurisdiction, and the specific types of rules that the agency ought to adopt following the Congress's enactment of legislation. So specifically for the Digital Commodities Consumer Protection Act, there is language describing an expansion of the definition of commodity in the Commodity Exchange Act to include digital commodities. Digital commodities would therefore become part of the remit of the CFTC, and we would expressly have oversight authority with respect to entities that engage in transfers and sales and certain types of transactions related to digital commodities. In addition, the statute includes definitions and express direction for the CFTC to oversee digital commodity brokers, digital commodity dealers. It establishes a type of parallel framework for market participants who are operating the digital commodity space that tracks the existing regulatory framework. So for the Digital Commodity Consumer Protection Act, there is a sort of effective and narrow description of exactly how the language for the statute that is our enabling statute will work. It gives us authority over digital commodities. And thereafter, all things that relate to digital commodity transactions would be within the CFTC's remit. It's important to note that there is existing legislation, there is existing legislation that essentially we are mapping onto. I think this is part of the consternation that you all have described through your questions. We are mapping onto existing legislation by adding and expanding the definitions of existing terms, adding and expanding the registration obligations for entities that might engage in transactions for those types of assets. And this ultimately enables us to leverage all of the lessons that we have learned. It enables us to leverage the strengths of our regulatory framework and to bring those to bear in a nascent market that is maturing in many ways and would likely benefit from that regulatory oversight. It also will give clarity.
Commissioner, sorry, I don't want to interrupt you. We're just running out of time, and I want to just ask one question I think a lot of people don't understand. So, as you said, if the CFTC suddenly, like crypto exchanges or exchanges that deal with digital commodities fall under its purview, how do you deal with the issue that these crypto exchanges have a mixture of both commodities and potentially securities, right? Like we look at Coinbase, for example, and some of those are now being questioned as securities. But if like an exchange fell under the CFTC's purview, but they weren't all digital commodities, how would that work?
So this is a great question that actually requires, I believe, very intimate collaboration between the SEC and CFTC. I had the great opportunity prior to wearing this hat to sit in a space where I spent 2 or 3 years actually exploring what exchanges, what types of rule books there might be for exchanges that would facilitate sales of cryptocurrencies that may be as diverse as coins and tokens or NFTs, or could be as interesting as things we've not yet even conceived or seen developed and distributed yet. And I believe that in the context of trying to bring those many diverse assets onto a single exchange or clearinghouse platform, it comes to be critical to think about how those two regulatory, how the jurisdiction of the two regulatory authorities overseeing this market might work together. This is back to the netting or weaving together of the jurisdiction of the CFTC and the SEC. So here, I think one of the things that could happen in the absence of congressional action would be a memorandum of understanding between the SEC and the CFTC about how each of the agencies might outline what they perceive as their the expansion of or application of their regulatory authority in the context of cryptocurrency markets. MOUs have been used and adopted in a number of contexts for the SEC and CFTC to navigate these types of thornier waters. So I would, think that might be one possibility, but I think the chair of each of the agencies is working diligently to attempt to find a place that we work hand in glove with Congress as they are attempting to outline rules or regulation that would be appropriate and applicable, not just for our markets as the SEC and CFTC, but more broadly across banking and treasury markets to ensure that there is a single, as I mentioned earlier, whole of government response to the questions that are emerging. We are part of this ecosystem at the CFTC, as is true for the SEC. But there are many federal regulatory agencies that will likely ultimately have regulatory oversight with respect to some element of the cryptocurrency markets.